Hey there, welcome to the Guaranteed Retirement Guy Show. My name is John Stevenson, and today we're going to be talking about what happens to my annuity if I live longer than I expected. Like, does it run out? Well, it will run out if you buy a period certain 20, okay, and you live longer than 20 years. It will run out, okay, if you get that. It will run out. I mean, the only reason why you'd want that is if you're absolutely for sure you're going to die at the end of 20 years, or you just want it for that because you have some other income starting at that. Or I had someone that bought a 10-year period certain because they're like, all right, I want income only for this, and I want to deplete this account for this, and I want the maximum income for this amount of time. At the end of 10 years, I've got my other income starting, and we're good. That's a solid reason to do it, okay? But if you're like most of us where you want that income to never end, okay, then you don't want an annuity that stops if you live longer than expected. Will an annuity protect me from that? Okay, will it protect me from running out of money? There are certain ones that will and certain ones that won't. Okay, now the account balance in that annuity may run out, but that income never will. And when we're talking about retirement, usually that's what we're talking about. We want income. It's nice to grow assets, and you can leave them for legacy if you want, but we build up our retirement savings for the sole purpose of replacing the income that we are losing when we retire, when we stop working, okay? We want to make sure that income is still there. And we want to make sure it never runs out because we don't know how long we're going to live. So we don't want to outlive it, okay? And I talk a lot about this in my videos because it is so important. And you have advisors that are like, yeah, let me manage your money. We'll put this in these mutual funds and you'll never run out. It'll be great. But you can't get an ironclad guarantee from them because there is no guarantee. And the market could take a huge dump, and it could really, really be hard financially and mentally and emotionally when you're going through those. And so that's why a lot of people will look at annuity contracts because they're great for that, okay? They're not great for growth, okay? Gordon, you got Dave Ramsey, you've got Susie Orman, okay? You've got other advisors out there online that are saying definitely do not buy annuities. Absolutely not. Make sure you watch this or read this before you do it. Okay. And that's how they do it. They get you in, they want your assets under management, and they want to make money off of selling you mutual funds and putting in these growth instruments that are fancy and that will protect you. And that's fine. You can do that. But in the end, if you just want a contract, okay, you just want a guaranteed contract, annuities have been around for a long, long time. Okay. And that's why people love them, is because it gives you the guarantees. It gives you the peace of mind. And you can't get that peace of mind from anything else, in my opinion. Okay, it's not going to be the same. I could be in a mutual fund that is great and has limited my losses, and it gives me a decent amount of gains. But in the end, I don't have that contractual paycheck coming in, and that's what I want. Okay, all right. So I'm going to show you some annuities. Okay, I sell annuities. That's how I make my money. Full disclaimer: if you're looking for an annuity, I would love to help you. Okay, if you're looking for one, if you're not, that's fine. Hopefully, this gives you some value. Okay. What I want is if you are looking, if you're already out there and you're in the market looking and you're looking for someone who's transparent, then I'm trying to create these videos, this content, so that you can learn as much as you can about these before you make that decision. And then, of course, work with whoever you want, or if you feel comfortable calling me and you want me to help you, then I'd love to help you. There is a link below this video, and it goes directly to my calendar. We'll get on a Zoom meeting, and I'll answer your questions, and I'll sell you an annuity if that's what you want. I'm not going to try to hard sell you, but I'd love to help you because that's obviously how I make my living. But at the same time, I want you to only reach out if you are looking for that, if you're looking for that transparency. And that's why I tell people, go to my website, johnstevenson.com, look at those calculators, find out for yourself, do your own research. And then if you still feel comfortable reaching out, then reach out. Okay, book a call. It's very, very easy, very simple. But I just want you to know, I'm not going to try to hard sell you. I want you to do the research on your own, kind of find out and watch my videos. And then if it's something that you feel would be fitting for your portfolio and for your peace of mind, then I'd love to help. So anyways, there's my plug. All right. Okay. I'm going to share my screen. Let's take a look at this. So we've got someone in Hawaii. It's $500,000. And I actually just helped someone in Hawaii 2 weeks ago. And we put 2 annuities together for him. And he got a great payout, really good payout. I think I got like almost $100,000 a year from 2 contracts. And I want to say we put like, what did we put in? $750. Yeah. So, and he was turning on them at different times. Anyways, there's another video where I actually dive in more on that. All right. So if we're doing this and we want to make sure that we do not want to run out of money, okay? We want to make sure that 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 money is there even if I live till 110. Okay, that's so important, because if you're planning on living till 85, but you get surprised, you wake up on the morning of your 85th birthday and you're still alive, and you're like, wow, I feel pretty healthy. I just might live another 5 years. But man, I was planning on living to 85, and I was planning on all my withdrawals. I was going to go to zero at 85, and now I'm not. What am I going to do? Well, there is this job at Walmart. I can try that out. Feel pretty fit. Maybe I could do it. Maybe I could be a ski instructor. Well, guess what? I ski, and I have skied with people in their 80s. So you probably could do that, but you probably don't want to. Okay. And so that's why we're talking about this. Okay. We're talking about this because we want to see, all right, what's going to happen to me, my annuity. Okay. If I don't live, or if I live longer. Yeah. I live a lot longer than I was expecting. I was planning on living till 85, but now, man, I'm going to live till 100. Okay. Or 110 or whatever. Okay. What happens? Well, guess what? These are contractual. They're guaranteed for the rest of your life. Okay. That you're never going to run out ever. Okay. So $500,000 in Hawaii is going to give you $33,825. Okay. That's what it's going to give you. And that's if you're married and you're both 62. If you're waiting till you are 67, what is that? $52,883 with NASA. Then you got Nationwide. I mean, I do Nationwide. They're A+. And it's virtually the same income. So there you go. Wow, pretty good, huh? I think so. So you pull that up and you say, all right, well, I'm going to take out $52,000 for the rest of my life. And it's because the benefit base grew to $875,000, which is guaranteed. And that is multiplied by 5.95. And that gives you $52,000 for the rest of your life. Yeah. Doesn't matter how long you live. Okay. If you live to 110, it keeps paying. Okay. This is why we're talking about this. It's all about longevity concerns. That's probably the best way to put it. It's all about being able to protect yourself and being able to, and I think this is why a lot of annuity holders live longer than the national average, because they have annuities. And they actually did a study on this where they do live longer. All right, so let's go into here and we'll say, all right, well, this is great, $52,000, but I want more. Maybe I don't want to retire at 67. Okay, maybe I want to retire at 70. What does that look like? Well, let's find out here. Well, pretty big jump. So NASA's a good company. They're just B++ when it comes to lifetime income. I usually like A-rated. ClearSpring used to be Guggenheim, good company, 50 years old. They're A-. If you want a bigger company, stick with Nationwide. Okay. You got other companies, Midland and North American, they're big too. They just don't give you as much income. Say, you can go down here, Athene's good too. But if you're just thinking, hey, I want A+ and I want highest income, then just pick this. So you go in here and we'll look at this, see how this grew, because you let it grow longer. All right, so based off of the income rider, it grows to $1,025,000 multiplied by 6.55. So see, look, they actually, at age 70, they flipped the switch on the lifetime withdrawal rate. See, that popped up to 6.5. So that gives you a little bit higher income right there. It's pretty nice. Wow. It jumps like $9,000 in 1 year. So that's a big jump. So if you're planning on waiting till 69, maybe wait till 70 on this one. Okay. They're all different, but this gives you an idea how that works. Then of course you live to 95. It's like $1.7 million. That's great from, only $500,000, and that's guaranteed. That's contractual. Okay. If you live longer than that, okay, this is illustrated till 95, but if you live longer than 95, some people ask me, well, it's only illustrated this long. That means the income stops. I'm like, no, it doesn't. They're just showing your life expectancy. Okay. It is a lifetime contract. I mean, we have people that are living in 101, and I heard a story about someone who was 101 years old, and the insurance company called them up and said, "Are you still living?" They just want to make sure that they were sending the income to someone who was alive. So, anyways, I just want you to know that they will keep paying you. Okay, they have to. It's contractual. It's for the rest of your life. If you live to 110, they will keep paying. They have to. But they're an insurance company. They sell life insurance too. They know how long people live, and there are people that will live long and people that won't, and it all evens out for them. Okay, it's not a big deal. Don't worry about it. If you feel like you're screwing them over because you lived to 110, you're not, because there's plenty of people that live to 75 or 80 or 90, right? But there are people living longer all the time, and it's going to happen to more and more of us. So if you worried about, hey, what happens to my annuity if I live longer than expected? Guess what? If you buy a lifetime annuity, a SPIA or a DIA, a life or a joint, same thing there. This is an income rider, same thing. I'm just showing you an income rider because they pay out more. So there are rare instances where the SPIA and DIA pay out more, but it is rare. It is not the norm. The norm is usually the income rider pays the most. So anyways, hope that helps. I I really hope this video is helpful. I hope that it's not too redundant for you, because I got several videos that are similar to this, but it is a subject that it bears repeating over and over because people need to hear it and they need to know how these annuity contracts work. So if you like the video, like, subscribe, share, comment below if you got questions. If you want to book a call and you want to chat about purchasing an annuity for yourself, there's a link below this video, and there's a link on my website, johnstevenson.com, and you can check out the annuity rates there and find out for yourself what they're paying, and then reach out if you feel comfortable. So anyways, I hope that helps. I appreciate you for watching, and we'll see you next time.